Good morning, everyone. This is your markets for Tuesday, January 30th, 2018. So it's almost February, and listen, we're almost getting through with the winter. You know, we're getting like into the real meat. If this was a sandwich, we're into the meat of it now, and we're getting through it. And I mean, we can see the light at the end of the tunnel. Things are going to start to warm up for spring. So you can start thinking about your spring things that you're going to do, making gardens, things like that, you know. It's really an exciting time of year. I always love the tail end of winter. The first part of winter, when you're in that fall time, is kind of a little bit depressing, you know. But then when you get through it and you start to get towards spring, you start to think about spring. It's the most exciting time of year. So you go from the worst time of year to the best time of year is when you're starting to get through winter and you get the whole summer ahead of you. You know, and this is that great time of year right now. So what are the markets doing? Let's start the charts right here. And we're going to take a look at the silver price first. Silver price is it's been awfully range bound, you know. So what we're looking at is silver running between a range of about $16.75 and $17.25. You know, right now it's at $17.13. So that's what it's doing right now, and it hasn't made a breakthrough or a breakout yet. Now, Bitcoin. Bitcoin is $10,400. And like I say, Bitcoin right now, I am not sure what it's going to do. I've changed my position back to 60-40 again. I was feeling a little bit more confident a couple days ago. With Bitcoin, and I made it 65% chance of up, 35% chance of down. Well, now I've changed that back to 60-40 again, with a 60% chance of up and a 40% chance of down. So I've increased the chance of down a little bit from 35% to 40% on Bitcoin, but it's still doing this consolidating range between, say, 10 and 15,000, you know, along in there. But it's just over $10,000, you know. We just don't know exactly what Bitcoin's going to do. Bitcoin's always been unpredictable, you know. So now the Dow Jones Industrial Average. What we're looking at here is down 263 points on the day so far. That's quite a big drop, 1% drop. I mean, we haven't seen any drops in a long time. And it's quite heavy volume, too, today. No, wait here. Look, the volume's not that great. I just took a quick look at it. Anyway, 263 points is what we're seeing, and it's down 1%. Now, that's the biggest drop we've seen in quite a while. It might be due to the bond market. The bond market jitters might be what's making it drop. But I'm not exactly sure what's making it drop, but I suspect it could be that. Now we take a look at Sweet Light Crude, $64.32. And it's down $1.24, 1.89%. So actually, in a way, that's a bigger drop than the stock market, but it's not so noticeable. Anyway, let's take a look at the U.S. dollar index. The U.S. dollar is 89.20. It's down 0.15. So it's not down very much, and the dollar is still staying up near 90. So that's what the dollar is doing right now. Let's take a look at bonds. What we see in the bond market is, let me refresh the screen. Okay, we see 271.2 on the U.S. 10-year. Now, here's the thing, what I'm expecting. I'm keeping a very close eye on the U.S. 10-year. That's the one I'm focusing on. And let me go here to the U.S. 10-year long-term charts. See if it'll haul up the chart. Click it again. There we go. Okay, if we go to, there's a year-long chart. You see it going up? It's got its little ups and downs, but it's really started to go up in about a month ago. It was really going up on a steep curve, and I don't see it stopping really, because the Fed's going to keep increasing the amount of the amount of cutting back that they're doing on this, selling their toxic balance book. And so I can see this actually increasing. Now, when it gets up, here's the marker I see. The next marker, next pit stop is 3%. And I think that once it passes 3%, we're in danger of a really large market correction. But I don't see the market, even though the market dropped 260 points today, I can see it probably going up over the next 4 or 5 days, making that ground up and gaining quite a little bit more. The market's on a charge, it's on a tear, and it's not going to stop until it's forced to stop. And this is what's going to force it to stop. I think when these U.S. Treasuries go over 3% on the 10-year, I think that the market's going to be in danger of a really sudden fall. An unprecedented fall. Well, it's not unprecedented. It's happened before. Probably a fall similar to 1929. It's going to be, I think, a crash. I tell you the truth, I think a crash. Nothing less than a crash is the stock market. And these institutions who say that they are so solvent and everything else, they're saying they're solvent because the debt that they've created is what makes them solvent. They're solvent because of debt. In other words, they make a loan out to somebody, right? I don't know who that somebody would be, but they make a loan out to him. Say the loan is for $100 million. Well, they get to write on that slip that they then have $100 million in their bank. They count that as a credit against the bank. But they don't have that money. That money doesn't even exist. The man just borrowed that money, and they've written it into their books. If he can't pay for some reason, say his bank goes under, say he's a banker and he's the guy that borrowed the money, and say his bank goes under, then suddenly that flips from a credit on that bank's book to a debt that they have to make good for, that $100 million. And it's not easy. They get a few of those start flipping, and then they go under, and in turn that money that they have that they borrowed from this other bank, it's like a chain. It's almost like a bunch of dominoes falling. First one domino falls and it hits the next one. It keeps falling. And the whole thing just keeps falling down. Because then they have to go to their guy and they have to say, well, we can't pay you either because now we're insolvent. And then he says, well, if you don't pay me, then I'm going to be insolvent. And he says, well, if I don't pay, then the next guy down the chain is going to be insolvent. And the whole thing just starts to fall to pieces. And all of their credits then are suddenly realized to actually be debt. Because all these credit is built on debt. And the flip side of it is debt. And so what's going to happen is all this credit that the bank have that they're able to show to say, okay, we passed our stress tests. We've passed our stress tests. That's all debt that they're passing their stress tests with. The real liquidity that they had in the banking system, they went out and they put it into risky places like the stock market and the bond market. And when these markets fall, boom, insolvency spreads everywhere. Then the federal government will have to come in and rescue them all because they're all too big to fail, obviously. The whole system will collapse if they don't rescue it all. And when they rescue it, they're going to have to rescue it with, this time, it's just going to be off the hook. What it's going to take this time is going to be off the hook, and this is going to be the death of the dollar. If you're in dollars and you got it all in the bank when this happens, then if you're all in dollars and you haven't got it in any other assets, you haven't got it in real estate, or you haven't got it in gold and silver, you haven't got it in commodities, you haven't got it in anything that's tangible. All your wealth is all stored in the U.S. dollar or in some other dollar, then you're going to, for the most part, lose all. You'll lose your house, you'll lose your car, you'll even lose your job, and you'll be sitting on the street corner because this is going to be bad. And I'm out there warning people what's coming. I'm warning you what's coming. And this right here, this U.S. Treasury, look at her go up. And she ain't going to stop, folks. She ain't going to stop until she destroys everything, this U.S. Treasury. And the Fed's behind it. The Fed's the one that's pushing it. And when it goes over 3%, and now you think, okay, it'll never make 3%. It's at 2.71 now. Well, just think back. It's just a few days ago it was 2.4. Now it's 2.7. It's not too much of a stretch of the imagination to see it going over 3%. Once it goes over 3%, then we're in the danger ground. We're in the danger territory. And I can't see it going past 3.25 before the market reacts, and reacts with a vengeance. You know? And so this is what we got coming. Now, let's take a look here at Turkey. Just for a minute. I'm changing subjects just for a minute. We're going to take a look at Turkey. Turkey's a problem because what's happening is Turkey and the United States are getting in close proximity to one another, and there's fighting going on, and U.S. and Turkish troops are heading for a showdown. In other words, the whole thing is they're demanding that U.S. forces vacate military bases in the Syrian district of Manbij. Turkey's foreign minister also said that Ankara is calling upon the U.S. to cease any and all support for Syrian Kurdish forces. But the U.S. doesn't let anybody talk to them and say, you're going to do this and you're going to do that. But they're heading toward a confrontation here. This whole thing is heading toward a confrontation. We're going to have to wait and see what happens. The United States forces are in Syria. Here's the areas right here. I'm going to focus in on this map where the United States forces are in Syria. Okay. This is a map of Syria, and you can see they've got a lot of forces in here. Looks like the northern part of Syria. It looks like, well, let me see what big cities would be in here. Anyway, I don't know if any of these are real big cities. This one's got an airport. See a little airplane right there? This is where the United States is stationed, and the Turkish forces are pushing against them. Let's see, where's Manbij? This is where the problem is, Manbij. Let me see. Look on here and see if I can find Manbij. Well, I don't really see it on this map in particular. I'm looking at the cities. Anyway, this is, they're coming toward a confrontation. So we're going to have to keep our eye on this real close. Thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye.